Scott. Hello, Jamie.
Hello, everybody. Scott, Steve,
Yep.
hello. Thanks for popping in today on this Monday. It is February 26th, and February will be in the history books in just a couple of days as this year continues to kind of fly by at a record pace. So welcome, everybody, to the Monday office hours. Before we get into the good stuff here, take a quick moment to make the lawyers happy. Just want to make everybody aware of the fact that we love sharing the information with you, but we're doing it on an educational basis only. Please don't take what we say in our webinars, this one or any of the other ones, as investment advice. If you do need investment advice, please seek out a licensed, qualified either broker or registered investment advisor or any other licensed person that can do those things for you and help you out in that capacity. So once again, everything we share with you here in these webinars is for educational purposes only. Now, moving right along here, for the new folks that might be in here for the first time, kicking the tires, checking out what trade ideas is all about. Well, we just want to let you know it's not just the technology, even though it is world-class, first in its class, pretty much only one in its class, but we've got a vibrant community built around the technology. It all kind of starts off with Barry's trading room. He opens the trading room 30 minutes before the open every day, and he's in there all day trading, sharing his trades with you and utilizing the Trade Ideas technology. So it's a great place to go and learn. Even if you're not a subscriber, you can get in there for free. It's free to sign up, pushing 500, 600, 700 people in there on any given trading day. So that in and of itself is worth checking it out. Plus, Barry does a fantastic job at what he does in there. Not only trading, but being the moderator to a large crowd of individuals. So check it out if you haven't done so already. Obviously, today's Monday. It's myself and Steve with you. Steve will take the helm tomorrow for Tuesday's Trade of the Week, and Andy rides shotgun with him. Change it up a little bit. Q&A on Wednesdays with Dan and Brad, always entertaining. And then Andy rounds out the 1 hour webinars on Thursday, and I ride shotgun with him. Change gears on Friday. We've been doing this for quite a while. Seems to be working. People are responding. And it's basically a 3 hour free-for-all, 11 a.m. to 2 p.m. every Friday. So come on in there with anything trade ideas related. While we're on that topic, I'll just throw out a quick blurb here about we will be transitioning to group trainings in the future. So right now, those of you who might be waiting a week, 2 weeks, 3 weeks, or longer for your training session, this Friday support session is a great way to fill the void in the interim. And by the way, we will be not offering the one-on-one training sessions after March 5th. All right, Steve, that gets us back around to what we're going to talk about today. So I know you've got some things you want to share with the good people here.
Oh, yeah, I got some thoughts.
I'm going to pass this baton back over to you.
All righty, let me see if I can grab it one-handed. Got it. All right, buddy.
Gotcha.
Welcome to my desktop. We'll expand out this giant daily chart here of the S&P ETF, the spiders as they're called, SPY. And what an interesting February it's been since January by the dip. This was our January, and this was our mosh pit of a February. Couple of things to continue to highlight. Look at the volumes, the intensity of the volumes on the downside. A lot of people might even call this distribution because obviously the price action has worked its way almost back up on anemic volume, not even barely half of what those giant down candle days were. So don't think that just because we're creeping higher here on anemic volume that we're out of the woods and what happened back here. This has not been forgotten, and I don't know if it's going to be forgotten. It may be revisited. But last week, we only had 1, 2, 3, 4, 5 candles back here. Let's go like maybe that right there. It's kind of what we were looking at last week, and I said, the classic example of correction is going to be what happens after that first bounce. So the first bounce was extremely vigorous. Well, here's the first bounce, and then we had a second sell-off and a second vigorous bounce as well. And then as the price action has been drifting higher off that bounce from last week, you can see the volumes are half of what they were in the panic selling of the downside. So as we hit this level, ideally, as a a short seller would want to see would be a reversal off of this wick, off of this declining 20-period moving average, and then start to put some more red candles in and drop back down. But we already know, because I've been hiding those candles, that was hard to come by last week. And so by the time we got to the Friday webinar, I pretty much said, this market has spent all week, buying the morning and then selling the afternoon and giving us these top tail wicks going into the close. And they were all substantially under the declining 20-period moving average. Well, even on this day right here, we're still looking, that's kind of a touchy, touch and go situation there. We need to post a close. And so what I said was, guys, we need to post a close above this declining 20-period moving average to make the bulls happy again. And well, wouldn't you know, on Friday, we got it. And I'm going to delve just a little bit deeper into it. And I'm going to try not to let my passive-aggressive tone come through here. But these are the markets we have. And it's not exactly the market that I would want, but that doesn't matter. It's the market that we have, whether we like it or not. What I'm going to highlight to you guys here is this is Friday. So we gapped up on Friday. Market kind of not doing a whole lot, starting to sell off and starting to roll down and get ready to fill that gap going into the weekend. Well, lo and behold, one of the Federal Reserve members decided to go on record and say, oh, hey, we're not against buying bonds. We'll buy bonds. We'll buy bonds. QE4 bonds. And that was it. That's all it took, guys. All it took was just a little bit of jawboning from the Fed, who's basically, had this market in the palm of their hands for the last 8-9 years with the quantitative easing and the buying and the balance sheet. And that was it. That's all it really took. I try not to get too much caught up on fundamentals or news or things, but I told Andy in real time, I said, look at what just came across Twitter and Zero Hedge. If you're not following Zero Hedge, whether you like him or not, that blog is on the pulse of economic data as it's being released. I mean, you might as well pay for a news feed with how quickly Zero Hedge will come out with this type of data. And Zero Hedge came out in all capital letters. Fed, one of the Fed members is jawboning and talking about, hey, we're ready to buy bonds again. And that's all the market needed to hear. Get the syringe, shoot up the patient full of junk again, and let's keep going higher. So I think you guys can kind of tell how I feel about that. Personally, I would like to let markets be markets, not try and figure out what central banker is going to say what next to prop this thing up and keep it going. So that's just my 2 cents. I'm not happy about it, but again, it's the market that we have, and whether we like it or not, it's too bad. That's what it is. So,
and Steve, they, the whole hitch behind quantitative easing is, oh yeah, we'll buy the bonds, and we'll just print the money to buy the bonds, right?
Yeah, it comes out of one pocket into the other.
Exactly. We'll just print money to buy the bonds.
But the idea is to signal low interest rates for consumers and for corporations to continue to borrow money and buy shares back. Once the interest rates get to a certain level, this market is going to probably show its true colors. But hey, I'm just one guy here that's happening to notice right as I zoomed out. Again, this was the whole week, and then once the Fed comes out and starts talking about more sugar water for the patient, boom. 2 days, solid day on Friday, going into the weekend strong and gapping up today. One more thing I want to show you is I'm going to keep this one moving average on my 15-minute chart, because I think I've mentioned before that once the price gets in motion and once it gets going in a momentum type fashion, whether it's up or down in action, this 10-period SMA on a 15-minute chart is going to be the guiding hand. So, I mean, look at what it did here on Friday, supported the price going into the close, and look at what it did today. We gapped up, and then we basically waited. This right here is always where I get really interested in the market on the intraday, when the market gaps up, and then you've got a moving average coming up from underneath, because that's where the rubber is going to meet the road, literally. And then look what happened. We got close to it, and then this green candle actually tagged it and took off intraday, never really touched it again until we got a little bit slop into the close. But the 10-period moving average is always going to be the guiding hand of a momentum market, either up or down. So I like to keep that. I am going to keep this just this one indicator on my intraday charts, because when they work, they can kind of work. And again, I think the most interesting inflection point that we had over the last 2 days was right here. As the market gapped up, it was starting to do the same thing it was doing on Friday, but it basically the guiding hand that helped hold it and push it and support it came in and touched it and moved the price higher. If we had seen a bleeding or a cross through down and close through that moving average, well, that might have been a completely different complexion for the day, but it didn't. The day's complexion today was pretty much set right here, in my opinion, on that. It's a 10-period simple moving average. I don't use exponential moving averages. I try to keep it simple. So I use the simple moving average. So that's the S&P-Y, and that's kind of a couple of observations I have had. You know, last week we were kind of on the heels until the Fed came in and jawboned the market higher, but it is what it is. And so the market is moving higher out of that congestion. For the most part, it basically was just a sideways congestion flag. And I said that could happen. The longer we went sideways in price without a correction or a rollover, more chances were likely that we were going to be pushing up higher after too much sideways action. Because if you think about it, after that stall right here, we really should have had a day or no more than 2 days of red candles and then falling back down. But the stubbornness of the sideways action kind of tipped the hand, and then the Fed basically sent it off to the races. The Qs, as you can see, are leading us higher. I mean, we are almost all the way back to all-time highs in the Qs. That's very impressive. And so the technology with the semiconductors today and Friday and tech in general, we're really helping to lead the way. And so here's your leadership again, folks. It's the NASDAQ once again. The diamonds, the Dow, not quite back up to interesting levels. It'll be interesting to see what happens when it gets back to this level. And then the Russell 2000, also it's going to be interesting. You see this level of resistance, we broke out of it, and then we kind of held it. So definitely a pivot line here in the IWM, the Russell 2000. It'll be interesting to see if we butt up against that tomorrow. And lastly, you know, the volumes, they're just not there. I mean, you can see on the charts that the volume spikes visually, but look at the relative volume. IWM today did 0.65, so it only did 0.65 of what a normal day of IWM volume should be. SPYs did 0.74. I bet the Qs are going to be a little bit higher. Yeah, they're at 0.86, and then the Dow ETF was at 0.81. So across the board, all the ETFs, you know, made new highs over Friday, continued the little move, but albeit on very, very low volume. And in my world, that is a little bit suspect. So, you know, we'll see what happens, but markets are hard enough to try and, you know, get your hands around with data and footprints in the sand, and then make a decision and have a plan and act on that plan. But, you know, when the Fed comes out and starts jawboning the market higher and you're on the wrong side, you got to pay attention to that. So that's my story. I'm sticking to it. Anything else you want to add, Mr. Jamie?
No. But I mean, you know, looking at that daily on the SPY again, I mean, the footprints in the sand on those top wicking candles, you're right. That's where it was headed. And then you got the Fed intervention. But once again, that's what they do.
Also, I like to look at the VIX and see if they're holding up. You know, if the VIX was flat today, rather than going down, that would be interesting. People would be saying, I'm not buying this move. But as we can see, the VXX, it did drop precipitously today. So, you know, we're probably going higher. Don't know for how long and for how much oomph and effort we're going to have behind it. But that's what I'm seeing there in the footprints in the sand. So
yeah, you made me think of XIV, and I thought they collapsed that whole thing.
They're done. Yeah, they're done.
Yeah.
It's insolvent now. Everybody lost money after hours on that disgusting Frankenstein ETF, ETN, whatever they want to call it.
You wonder why they even let it down there at 6 for a little while, you know?
To let people maybe get out at 6. I don't know. I have no idea. But VXX is the only thing that I really will look at. Those other inverted triples and doubles are not really that interesting. But that's it. You know, footprints in the sand speak. They have spoken. The sideways action did not yield lower prices, failing. Low volume push higher. A little bit of help from the Fed, and here we are. So, all right, back to you, Mr. Jamie.
Good deal. Let me grab it real quick here. And when my screen comes back up, you'll just see I've got my slide deck here, and you know, adding to Steve about the volume, you know, real early this morning, and let's just take a look at my compare count readings this morning. So after the first 15 minutes, you know, I typically, or I tweet these out every day, and we can see here, after the first 15 minutes in the big cap movers, the 4 billion and the 5.4 in excess of 5.4 billion, look at this paltry little bias that we had here. 52, 51, barely any type of a bullish bias. And of course, you know, anytime it's under 55%, it's going to be, you know, it's going to be one of those days where, sure, there's going to be opportunity, but not necessarily a whole lot of follow through. And of course, once we, you know, that's with 54, 53, but when we're, you know, hovering right at 52, 51, when I see this type of information after the first 15 minutes, what does it tell me? It tells me, well, it's going to be one of those days where, hey, there'll be some short opportunity, maybe a little bit, but there's going to be predominantly long moves. But, you know, when you're up 25, 30 cents, before too long, you're going to look back, it's going to be back to flat most of the time. Not saying they all do that, but it's one of those days where if you don't take those cookies, you're going to get crumbs on the next pass. So looking at these expectations, and then noticing, you know, very early on the paltry relative volume numbers, and then what the market is doing. And by the way, I want to show this next slide because this is from Eric over at Nanex, who has pretty much made his fame on showing people how, well, how strange things can get in the data world. He shines a light on all the high frequency trading, and you can see his comments today. Liquidity on the big things, the SPY. And we had a solid third world liquidity, and we can see the little sliding scale here. You know, first world's over here and world class is over here, which you would think the U.S. equity markets would be doing most of the time, but nope, we were at third world liquidity today as this move took place in the SPY, which Steve was so eloquently.
It's a different way of looking at it. Yeah, just a different way of looking at it there.
But it all leads back to the same thing. Expectations right off the bat. Well, I can't say right off the bat, but very early on, telling me, hey, it's you know, it's never easy, but it's going to be pretty slippery slope today. All right, and then we see moving right along here to Holly. All right, you can see here, busy, noisy. Holly was busy, but a lot of trading to get these results that we can see here, and these are the final. Risk on, only up 64 cents. This tail's the tail right here. You know, we go up, we jerk down, we go up, we jerk down. It was just kind of like a little, you know, seesaw with some razor blades on it, and if you didn't get off and on at the right time, you're getting carved up pretty good. And then we can see the capitulations and or the vacillations even getting much more severe here as the day progressed and we headed into the close. Now, risk on won the day today, $1.25, not as near crazy vacillations as we are looking at the risk on, which of course is just looking at the entire portfolio that Holly gets into for the day. And today wasn't a quiet day, 22 trades total if we tallied all these guys up among 6 strategies that were active today out of 10. All right, so she came to the party with 10, only 6 strategies fired. These guys remain silent. So we had a little bit of a short activity in here today, but predominantly longs out of a trade count, you know, right there at 22. So 3 shorts out of 22 and 19 longs. And of course, green is green. Never mind seeing Holly green, but you know, a lot of trades to get there. A lot of trades to get there. So typically we like to see a less amount of trades in a higher number, but green results took a lot of churning to get there. Let's see. And Marcia, we'll get to your question here in a little bit as soon as we get done with the Holly stuff. So I didn't want you to think we were ignoring you there. So what was Holly? What was to be taken away from Holly? And we really had to examine these things on an individual basis as they came out. Of course, Holly didn't get started until maybe a little shy 30 minutes into the session, 6:57. Market opens at 6:30 a.m. Pacific Standard Time where I am. And she starts off with 3 longs. Boom, before too long, a couple of shorts out there. Pretty mixed bag once again, but not too surprising when we saw what the 15-minute opening compared counts were, how the volume levels were, and you know, and also tagging on where we've been and where we were on the daily on just the markets in general. And of course, what do we have to start the party today as well? The nice gap up, all right, which always throws a little bit of maybe a few extra factors in there, which can confuse, not necessarily confuse, but make it a little bit more difficult on a statistical system. And by the way, hey, the gap doesn't just make it more uncertain for program trading or statistical models such as Holly. It doesn't make it so easy on us humans either. We could sit here and debate all day, hey, why are gaps even necessary? And of course, you'll hear all types of opinions, and of course, it comes from the community of the market makers and whatnot. They'll try to spin some yarn about risk and all that good stuff. But in the end, we'll never really know, but they are things that we have to contend with. So as far as examples of ways to interact, there are lots of examples of risk on today, and there are a couple of examples of a trade around. So let's just pick a risk on to begin, and let's just pick WLL here. And we can see I just sorted by risk on. It's got a nice fat spread in between there, between risk off of 17 cents, risk on of 64 cents. So in case there are any brand new people out there, risk off, what does that mean? That's just Holly obeying her rule set, getting out of the profit target or the stop loss or the timed hold hits. She also reserves the right to get out on a reduced risk or a profit save, which not a lot of profit saves in there today. Now, one thing I'm noticing, Steve, is today there were no stop outs that I'm seeing here, and that's typically the case with Holly. Most of the time, those hard stops never get hit. You'll see her exit early on a reduced risk or a
well, take it a step further. What direction are they? For the most part, they're mostly all longs, except for the couple shorts that were fired. And then you look at the backdrop of the market today, and it was a slow grind and slow creep higher. So not a lot of market volatility, and that would typically, bring in more downside volatility for a possible stop out on one of those trades. So I'm kind of not surprised that we didn't see a stop out today with just a low, slow grind higher.
Yeah. Okay, so let's take a peek at WLL on the chart here. Just got a 5-minute intraday right here. Of course, you notice when I double click here, we get the arrow pointing me to the bar. We get the blue line corresponding with the entry price. So Holly calls for a nice buy right here. We get an immediate pullback, so we're in the red a little bit, encroaching about halfway of the distance down to our hard stop. Of course, no hard stop occurs, and then we creep back up to that entry line again, pass back and forth through it 2 or 3 more times before this thing finally lifts and she's in the money. Now, of course, the green area right here on top of my black chart, this is the time that Holly spent in the trade in risk off mode. And of course, on this one, float on is designed around 60-minute hold time there. We can see that is indeed why she got out. Of course, getting out right here because she's programmed to do that. And if we are in the trade with Holly, we see her exiting. That's her getting out on risk off. So she plucked a walloping 17 cents getting out right here. Now, of course, we're human beings. We see her getting out. We see what the stock's been doing. This little sideways consolidation here over a 5. At the close here, we're up 68 cents. We can see here probably a little bit more than that potential at the peak here. But the bottom line is, this is how we want everybody to interact with Holly. We see her getting out of the trade. We think to ourselves, okay, I like this little consolidation area. I'm going to stay in it, put my stop loss right at the bottom of that little area right there. If it gets me out, great. I'll make a little bit more. I'm going to lock in the profit on my first half, set my stop here, going to try to make a little bit more. We're deciding to go risk on, accept a little bit more risk on that second lot in hopes of making more money. In this case, it would have worked. Whether you get out here, 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 or held to the close, even if you held all through this, still didn't get our adjusted stop loss here. So just trying to give you a peek into how you might be able to capture some of this spread in between risk off and risk on. 50-cent spread there, 51-cent spread there, nothing to sneeze at, and a big difference between 68 cents and 17 cents. So in the beginnings, when you see Holly getting out, just mentally do it, whether you're paper trading or if you're actually taking the live trades. Get in the habit. Take half off with Holly. Adjust your stop loss on the second lot to a break even or whatever you feel is appropriate. And if the chart dictates it, take a little bit more risk, because that is the way that is the best right now with this type of technology. We're working with the machine. We're relying on Holly to produce us the statistical viability that she does every day, the entry, which is key, obviously, and then using our technical chart reading abilities to figure out if we need to try to stay in that trade or get out with Holly. So that's risk on. Now let's talk about another trade or another action, we could say, that you can engage with Holly, and that is a trade around. All right. So this one right here was a reduced risk, and we see Holly bail. Her stop loss didn't get hit because we can see it right here on NVO. Hard stop never got hit. She gets into the trade, gets in the money, comes back here. She's like, well, I was in the money, time's progressing, things aren't improving, I'm gonna get out. Actually, was that a reduced risk? Yes, it was. Okay, so she pulls the plug on it right here, goes ahead and eats the loser, and then what happens? Comes back down here, snuggles up, and it retests that entry point one more time, hugs the line, and then, of course, finally gets a lift.
Maybe for people who are not aware what exactly reduced risk means, we could define what Holly is doing there.
Right. So she gets into the stock right here. We can see the price action in the money, comes out of the money, and basically it's a time factor. The longer she stays in a trade and it's not going the direction that she hoped it would, the longer she stays in the trade, that time decay kind of kicks in. So we like to say it's a type of trailing stop, but that's more for when she's in the money, which she was here, right? But the longer that the trade is open and it's moving against her or not green anymore, then the more probable it is that she can pull that card, play that card in the reduced risk aspect, Steve.
Just like a lot of traders will do. They'll get into a trade and they'll sit there for an hour and it's not doing what they expected it, and they're like, hey, how you doing over there? I'm just trying to flat this thing. I'm just trying to get out for a flat, no harm, no foul, and move on, because it's not doing what I expected it to do. So our AI logic has the same kind of a sequence there.
Yeah, in essence, time is not on your side. When you're in something typically that's not working, typically time isn't on your side. So, we folded aspects of that into the AI, and on the opposite side of that, which we don't have any of these today, on the profit save, she can do the same thing, except bail out of a winner early. And of course, sometimes she leaves money on the table, but we don't see any of those today.
Yeah, if there was a profit save on there, we would probably say to some people, that's another term for what people would call a trailing stop.
Correct. And of course, so let's see here. So that's a risk on the WLL, a trade around on this guy. So whether she's out of the money or the stop has been hit, it's the same type of drill. You just simply go up and you right click and you set a price alert for that blue line again, so that you'll be notified when it hits that level again and you can act on it. Because the stat probability, it's good for the day. Sometimes the timing is just a bit off. Sometimes it'll pass through there multiple times. And especially on a day like today with those weak compare count readings and the weak volume, these are the days where you'll see a lot more of these guys hug the line or pass through it, not once or twice, but maybe sometimes 10, 11, 12, 13 times as they do this little consolidation dance before they finally get that lift. Now, even though it was a tricky day, and a lot of the times today, if you didn't take the money, it was gone pretty quick, but this max profit column here is looking at how much she was up in risk off mode at the peak. And even so today, with 22 trades, the fact that these are all positive numbers, with the exception of GNMX, which was really just kind of never in the money to begin with right here, because here was the buy up here, and we never had any red ticks, so that's why it's saying max profit was 0. You were never even in the position to, you could have flatted it at best if you were quick. But here, even on these losing trades, you were in the money for a little bit, right? And then so forth and so on as we get up here to the ones 10 cents and above. From a statistical perspective, it's still a pretty hard thing to do, to go, okay, I'm going to throw out 22 trades today, and on the max profit, the worst one's going to be a flat or 2 cents, 3 cents, 4 cents. Not saying that, we should blindly jump into things based on this. I'm just pointing it out because from a statistical standpoint, that's not an easy thing to do, especially on a day like today. And it seems like no matter what day it is, when we look at this max profit column, we're seeing basically the same thing. I'm always shocked and amazed that we're not seeing any things that were, we're not seeing a bunch of zeros here, or even, more than one, especially on a day like today. So once again, what is Holly's superpower? It's the fact that she's bringing us this statistical probability each and every day.
No emotion.
Doing that heavy lifting behind the scenes, and then of course with some of the other things that we get in the custom of doing, like the compare counts, setting our expectations. The more you do that, the more you go through this process, the more everything seems to drive, and the more you'll get into the habit of going, well, it's one of those days where I better keep my powder dry and only pull the trigger on the pristine ones. And then there's going to be like days like today where it's kind of a mixed bag, and then we'll have the days where the buying's really strong or the selling's really strong, and we'll have some information moving forward after the first 15-20 minutes or so in the market, because it's all about expectations. We need our tools, we need our game plan, which is our trading plan. We've got to stick to the rules. We've got a lot of things, a lot of laws we have to obey. But if you come in with the wrong expectations, that can throw things wacky pretty quickly. So it's always very important to temper those expectations each and every session.
Yes, sir.
All right, so yeah, I noticed Christopher was making the same comments about, the reduced risk, timed exits, no profit saves. Yep, that is correct. But a pretty busy day nonetheless, but just kind of marching along to the tune of the zombie market that we had today, with the low volume corresponding with, all the action that we saw, not only at the end of the day, but in the beginning of the day and all throughout the middle of the day. Just trying to look here and see if there were any other shining stars. There was, the little RRTS did turn in a pretty handsome percentage gain today, 19 cents. And then, of course, risk on yielding almost 10% through the close of the day. And once that move happened, we backtracked a little bit, but never really even made it back down to the entry point here. Of course, I'm sure this bar was a little extended. Because getting it right there at that point, probably not real feasible, but somewhere up in here would have been a nice fill in that little guy. Roadrunner makes me think of when cable modems first came out. Everybody wanted the Roadrunner.
That's right, Time Warner.
All right, so any other comments before we kind of cruise on from Holly here, Steve?
No, you said earlier her superpowers. I think one of her superpowers are the lack of emotions, plus the ability to backtest a million items over the course of an evening. But to deploy it with no emotion is a superpower in my book.
Absolutely. Well, since we're the humans interacting with the machine, unfortunately, if any emotion comes into it, it's all our fault. Which, no matter how we try, it's going to happen from time to time. The fear and the greed demon. But as we've talked about in the past, if you're engaging Holly with a risk-on, risk-off scenario, you're in essence tending to those demons. You feed them a little bit, they leave you alone. You peel out a half with Holly, you fed the greed demon or the fear demon.
Maybe one of the best ways to keep the emotions at bay is to split up your order, sell half, and let the other half work. It's amazing how easy that can be.
Of course, it's all greed trying to make more.
Yeah.
But you're feeding the demon, and that's the best way, because most times you can't get rid of them. They're always there. You just have to keep them satiated.
I wasn't in Barry's trading room today, but Christopher says that our RTS was a popular one in the trading room today. That's good to hear.
Oh yeah, I mean, even another little, if you didn't get it, maybe you didn't get it here, and another little chance for a nice little, almost, 50% pullback of that green bar. And
I'm going to have to do this. I'm sorry. I'm going to steal the screen from you for 1 second.
Please. Got me excited now.
Yeah. Well, and then this, somebody was chatting with me too. But once again, here's the momentum line, the 10 SMA on a 15-minute chart.
Yep.
First test, boom, holds it like a baby. Holds it like a baby all friggin' day long, okay? So maybe somebody right now is saying to themselves, how do I do that? Well, just a right-click, indicators, SMA, go ahead and grab yourself a new SMA and change it the time period to 10. And that's all you have to do, and it's just a 15-minute chart. But once again, the stocks that work, the ones that work, they continue to be held up by the momentum line. That's my nickname for this line, the fast line, the momentum line. So as I was looking it up and pulling it up off Christian's first comment and looking at it through my charts, I just had to send the desktop over once again to remind people that this can be a really neat indicator. We had a lot of volatility. We got ahead of ourselves really early in the morning, and then look what happened. It just waited for that 10-period line to just come moseying on up and continue to basically support the price the rest of the day. Great example. So 10 SMA on my 15-minute chart is probably my favorite indicator.
Yep, good stuff. Good.
Back to you.
Okay. So now what we're going to do is we're going to continue with Holly, but in a little bit different capacity. So Holly's providing us with all of these trades on a daily basis. Today's a great day to show you guys this because it's Monday. You still have a chance to get in here and start building this list so that you can not only build a list for today, but Tuesday, Wednesday. I would highly recommend building this list every day. In other words, we're going to take all the Holly trades, we're going to put them into a list. We're going to make a top list so that we can continue to monitor some of these things because, as some of you know, maybe all of you know, I'm sure there's somebody out there that doesn't know, but the bottom line is, as far as high quality goes, I mean, you're going to be very hard pressed to find higher quality symbols than this on the intraday, ones that have viable statistical probability and that have been tested and tested and tested. But lo and behold, when we start looking at these daily charts, we start noticing other things like, hey, this thing might be good for a swing trade, or it ran up, it's right at the top of this resistance, and it did it with extremely huge volume, so it's either going to break it or it's going to fail. That might be a good stock to watch on the open because even from an intraday perspective, if it lines up and the risk is good, based on what you've known from the past, whether it be a day or a week or 3 days, you can pop a good intraday trade off of that. All right, so intraday, swing trade, it's all fair game. So what I did today, and this is the real simple process that you'll do, is each and every day just get into the habit of doing the following. At the end of the day, what are we going to do? We're going to pull up Holly's All Trades blotter, and we're just going to click on the first symbol. We're going to drag everything down like so. We're just going to highlight that column. We're going to hit Control V on the keyboard, or excuse me, Control C. We're going to highlight the whole thing. We're going to hit Control C. All right. Once we do that, then we can easily navigate to our symbol list. And you can see I've already done mine with Today Holly, but let's just do it all over again. Let's go Holly now. There's my empty list at the bottom. We're going to edit it. We can either hit Control V, boom, oops.
Nope.
Or right click and hit paste. Why is that in there?
Because you probably clicked around after you saved it.
Okay.
Yeah.
Control C. Now I hope I'm not acting up because it felt weird when I just hit that. Okay, edit list.
Yeah, they didn't stick. The highlights didn't stick on those symbols. Try it again.
No,
Scrape the column.
Yep.
Do right click, copy. Let's make it simple. Can we do that?
Nope, can't do that here. See, that's why I was hitting Control. Okay, I think it's
Control
stuck.
C. Okay, really Control C. Looks like it's stuck. Yep.
Yeah. Okay, there they are. Okay, we can see 22 trades are in there now. And of course, the beauty in this, ladies and gentlemen, is the simplicity, right? You don't need any custom formulas. You don't really need anything except an empty.
What do you want to sort it by? That's what you want to figure out.
Right? So just keep in mind, here are the ones for today. Now, tomorrow, Wednesday, Thursday, Friday, think about how many stocks you'll have in here to keep an eye on after just a week or 2 weeks or a month. And of course, pop in here. Where do we have the list pointed to? We have it pointed to our Holly list, of course. Just want to show everybody. There we have it. Today, Holly. Only this list. Once you play it up.
And I agree with Jamie. It's like, what do you sort by? How do you monitor this stuff? Well, probably one of the best things to monitor. And somebody asked a question about this earlier, relative volume. How is it doing relative to what the stock is normally doing for this time of day? And the word relative, the operative word is the clock. What's it relative to? Well, it's relative to the clock. So Trade Ideas is smart. It knows at 11:30 Eastern AM what stock XYZ should be doing on pace for volume. If it's right on pace, you're at a 1.0. But if you're doing 6 times more volume at 11:30, well, now we're talking a 6.0 type of relative volume. And so if we've got a giant handful of these stocks, the ones under 1.0 we're definitely not interested in, but maybe we're interested in the small handful that are up, rising to the cream, rising to the top in the relative volume column. That's probably a good column to really focus on.
Right. And, of course, it really depends, well, what flavor do you like? And everybody's a little bit different. Of course, we all like volume because, well, the more volume with a pattern continuation, the better, and all that good stuff. It's the equalizer. It's not the holy grail. Or maybe you're a range person. But the bottom line is we can do that. I don't have the daily range up here, but I've got 10-day, 20-day, yearly, lifetime. So you're like, this MGNX is blown through the 10-day, it's blown through the 20-day.
You know what else you could do? Just for fun, it just occurred to me. Let's add another column that might be a column of interest. Okay. Let's add the R column. It's the pivot filter. And if we just don't filter for it, but maybe add that R1 column, maybe we can see how close stocks are to their coming up resistance levels. It's under pivot.
Right.
There you go. So distance from pivot or R1 pivot. There we go. Distance from R1. Distance from pivot R1, the second from the top.
Okay.
Okay, so that's going to be the most recently upcoming, or the what's the word I'm looking for? The most near-term level of upside resistance we're coming up on. So that could be another column that you could sort by. You could sort by stocks that have made it above their R1 or that are approaching their R1. I see your question, Bill, and I'm happy to answer that. Now, pivot levels are levels that they can be a level of prior support or prior resistance. Now, there's a standard formula out there, and a lot of programs and platforms use it. They call it the S and the R, and they go even deeper, S1 and S2. Well, S1 is going to be your first level of support. S2 is going to be your next level of support under S1. R1 is going to be above. It's going to be for resistance. So the most near-term resistance point is going to be classified as R1, and the resistance point beyond that is going to be called R2. And it's kind of a universal formula that is a lot of platforms do have. And so it's just another way to kind of mark where the price is in relation to key levels.
True. And David, your question about relative volume, I mean, we pretty much use the classic relative volume formula. And of course,
goes back many weeks, though, David. It's not just looking back 5 minutes. It's looking at the whole day. It's looking at the clock and how that day and the clock compare to the past weeks. So it's going to go back many, many weeks to compare what today's relative volume is versus where it's been in the past.
Yeah,
and it's really the power.
It's a great overall metric, but it's not real good for detecting volume changes in the short term, right? As we have shown in the past, let's see.
5-minute volume would be something like that.
In my more classic view of the let's see if I got I don't have a current copy of my volume radar up here, but typically I've got the 5-minute, and we can see relative volume of like 11 or 12 or something huge, but then you look at the 5 and the 10-minute volume, and the stock has gone to sleep. It had big volume. It did big volume early, but guess what? All the volume's come out of it now.
That's a good point, having those two columns right next to each other. So a high relative volume reading, you look left with your eye, oh, it's still got 400% 5-minute volume. Okay, well, that's workable. That's interesting.
Right. And you can see these guys were all like, this guy's was the worst one. Of course, he was showing a pretty pathetic relative volume to begin with. But it's interesting to see that all of the stocks on here, a minute after the close, we're still doing.
That happens generally at the close. You're going to get a rush of volume. A lot of times those 5-minute volumes at the closes can be misleading a bit.
It's the same as the open, just not quite.
Exactly.
Yeah.
Yep.
But just think about this. These guys all finished the day with some pretty substantial movement. And look at these volume levels, right? So out of the list of 22 today, 1, 2, 3, 4, 5, 6. You should at least, whether you look at all of these stocks, but these things were doing something, right? So if we start pulling these charts and going, okay, well, is this guy really going to be, bumping up against some hardcore, resistance at this level? Because tomorrow on the open, if it opens up here and then all of a sudden we get a little sell-off, or things look wonky on the whatever you're looking at, maybe it's the order book, maybe you can just get short and keep the loss really tight. Well, that might be something that unfolds tomorrow. And of course, I'm just picking that out of the hat randomly. But the ways that you can use this data, it's really just up to you.
Let's take it to the next level. Let's go, what do you do now? So you like RRTS. That thing was a baller today, and it's had a nice bounce and closed at or near highs. Well, maybe I don't want to lose track of this one tomorrow, so this becomes the perfect situation to create the price alert for some follow through tomorrow.
And we could just say, whether it's the high of today, which would be, 436, maybe 441. If it gets a little traction, it starts popping this level. All we have to do is right click. If we're on the price, it's already going to be in there. But you can always blank this out and type in whatever price you want. And, Holly trade from yesterday.
Yeah, it's always nice to put notes in, where you found it.
Yeah, and then whatever other things you'd like to reference in here, because that way when you pull it up, you're like, what was that again? Where am I getting this signal? Oh, yeah, I remember exactly where it came from. Boom.
So just a quick recap. All Jamie did was grab all the trades today, copied and pasted them into the watch list. And then the watch list is pointing towards, in this particular top list, is pointing towards that watch list. And then it's just a matter of how do we want to present the data? Do we want to present it in what's strongest in the last 5 minutes? What's the best relative volume? Oh, I like this chart. This chart's interesting. Let's not lose track of this chart. So we'll put a price alert on this chart. And now we're guaranteed to know if the price does trade through there, we're not going to miss the opportunity to have a discretionary trade decision to make.
Yep. And so whether you're focusing on the daily or just the fact that it was doing crazy volume on the close and it's been moving, well, then when you see that setup on the next day and it's still doing that volume, you're like, well, this has a better chance than a typical coin flip. Or you might see just that perfect setup for a reversal if you like to go short. But, if we say, okay, number one, this is some of the highest quality data that we're getting coming out of Holly. And then we take that high quality data and either whether we acted on it on that day or did not act on it, it's still high quality data. So we're going to continue to watch it, because along the same lines as statistical probability is good for the day, these things, assuming they're doing big volume, they might keep doing interesting things. Once again, the only reason that we're going to continue to follow them is that Holly produced them for us. And of course, more and more of these are starting to show up and look like very good swing trades. It was like Sean's been really showcasing a lot of those here lately, Steve, and been tweeting those out. And, that's one way to do it. And then you can take this data and apply it to the next intraday session as well. But, get in the habit of doing this. Today's Monday, so you can still do it yourself. Build a list, see what it looks like at the end of this week, and then see what actions you've taken on it during the week or maybe even in the following week.
Yep. So this is a good place to wrap up, in that you do have at least a couple people asking for the shell here of the scan. So he can easily drop that into the cloud links into the chat window, which is on your GoToWebinar floating toolbar there. And once you got the cloud code.
It is a shell. It's just an empty shell.
That's why I called it a shell, because you guys are going to have to do the secondary part, which is creating a Holly watch list and keeping track and monitoring the symbols in that list. And you're probably going to want to clean it out every 3 to 5 days, and then just repopulate it with the new stuff and see what's attractive.
Indeed, and over time, you know, I plan on keeping these lists in a weekly spreadsheet, right? Because what I'm going to do moving forward is I'll set them up and see, you know, you never can tell. Well, these stocks went through the wave last week. Oh, well, guess what? I've got these pointed to a high-low ticker or one of your other favorite top list tickers, and you're like, hey, you know, you might start to notice some correlations with the ebb and the flow about what was popular last week, took a leg down. Well, now it's coming back around. So once again, I'm just pulling these things out of the air here, but you never know what you're going to find when you start archiving high-quality data like this. It's like a data adventure. You never know what Easter eggs are going to get distributed when you start archiving high-quality data. All right. So looks like we're in the last 5-minute stretch here. Looks like we're all pretty caught up.
We're caught up on questions. We're good.
Okay. Well, Steve, once again, great stuff on the market. Market recap as well on the price action. Definitely been interesting. And you know, what's the best term here? You know, you really had to be on the edge of your seat here the past week or so. And you know, at this rate, with the Fed intervening, who knows? We might be back at the tops towards the close of the week, or maybe take a leg down. But we've all got front row seats. So Scott, if you're ready to play us out. We're ready for you.
Yeah, sounds good. Thank you. So
Yes,
we
sir.
have a couple items on the way out. Want to make sure everyone's had a chance to download the ebook that Steve and Jamie participated in creating along with our other educators. Just go to trade-ideas.com/ebook and make sure you download that so that you're prepared for the volatile market. We're probably not going to see straight up easy to navigate bull market again for a while. Might be a little bit choppy, so make sure you're prepared. We've also got a podcast that we have new episodes coming out every Friday, so make sure you are subscribed to that. Search for Trade Ideas Podcast in whatever app you use to listen to your podcasts, and then you can stay current. There's a new one out last Friday, and the previous Friday we had a special guest, and we have a new one coming out this Friday, so check those out. We do have a discount code for you, 15% off your first month or year of Trade Ideas. Just go ahead and use the code HOLLYISLOVE, all caps, like you see it on the screen, and that will let you get into Trade Ideas for under $3 a day. Get it going. You can download that code along with some of these other slides by downloading the handouts. Just expand the handouts panel on your GoToWebinar interface and click on the blue link. We'll see you all in the next webinar. We'll have a recording of this one up later on tonight or tomorrow morning, and you'll get a link about how to locate that playlist where the webinar is located and all the other replays are. You get that tomorrow. Thanks all. Just email info@trade-ideas.com if you have any questions, or you can email Jamie or Steve directly. You can follow us on Twitter and Facebook so you can share all the good stuff. Steve Gomez is Today Trader on Twitter. Jamie's QuantBot. Dan Merkin's Trade Ideas 1. We also got Trade Ideas, some other handles, so check them out. All right, thanks, guys.
All right, thank you.
Yep. Thanks, everybody.
Later.
We'll see you on the